Welcome to Bullion Bulletin in this first edition of Asia Pacific Precious Metals Conference. Now, one of the lead sponsors of this conference from World Gold Council, Mr. Robin Martin, is me. He is Managing Director, Market Infrastructure. Mr. Martin, welcome to Bullion Bulletin. My first question is this digital gold or the fintech in this Singapore region. So this product is becoming very popular. Even I have seen one product is launched in India also recently. So what is your feeling? How this gold is going to change the investment market?
Well, first of all, I think you have to separate the hype from the reality in the digital gold investment market, right? Vaulted gold providers, online providers that have allowed retail investors to access gold have existed for some time, right? And that's, if you like, a natural evolution of the product spectrum. So, even in India, we've recently seen the high-profile launch of some of these providers that essentially allow you to invest, even in small denominations, few rupees, into fractional amounts in securely held kilobars in a vault, right? This product model has existed for some time. There's various providers around the world that offer such product. What you're now seeing a lot of is particular providers making a renewed push and sort of evangelizing the concept of blockchain-enabled digital gold. The idea here is that you can tokenize the asset, in this case gold, and then freely trade that token on a distributed ledger. So it is really about appropriating some of the concepts and the technology that underpin cryptocurrencies like Bitcoin and Ethereum that run on a distributed network and trying to impose some of that on these vaulted gold providers.
Tell me one thing, this blockchain, this tokenization of the product and freely transferable, freely tradable in the in that segment, this platform. Now, when I am trading this, the value realization, the value of that coin token, it is based on the demand of that network, I feel. So, how you are deriving that? At what price this token should be traded? Whether it is aligned with the physical price of the physical metal, or it will be totally a de-aligned market from the
right. So there is no universal concept, right? So different providers are going about this in a different way. Typically, the most transparent and probably the best product model for the market is one where one individual token corresponds to a fixed amount of gold, be it 1 gram or whatever, and then you essentially have a secondary market trading on this closed loop private platform. And as the demand for gold exceeds the stock of gold in supply, that product provider then sources gold from the wholesale market, and similarly, as retail investors sell out of their holdings, that physical stock, those individual kilobars, are fed back into the market. So much like with an exchange-traded fund, you have a one-to-one relationship between tokens, or in the ETF market, ETF shares, and physical metal held on an allocated ownership basis in a vault. There are, having said that, other schemes where the number of tokens or digital units is fixed, and the number of gold, the amount of quantity of gold is fixed as well, and where the price then also fluctuates as a function of just how much retail investor appetite is flowing into and out of the product, which exposes investors to certain risks.
But this blockchain technology, maybe this is a matter of a regulation. I think in India, this cryptocurrency, that Bitcoin, has not been regulated by RBI yet. So, when I am launching this product, some countries may adopt, some countries may not. So, how in general people can, will you see any kind of a problem in participating in this kind of market? I mean, if there is a general consensus,
Yeah, and I
it
would,
is not a Bitcoin; it's a gold.
exactly right. So there are legal nuances by jurisdictions,
Yeah.
but without getting into the specifics, I'd say it's less of a question between gold and cryptocurrencies, right? Because Bitcoin is its own type of asset,
Right.
and as you say, RBI is looking at this. Regulations are being drafted in various countries, but none of that is likely to affect tokenized gold offerings, right? Because the reality is, all you're doing by using blockchain in the gold space is you're using the technology as a means of recording ownership,
Yeah,
right?
okay, yeah.
And arguably that can be more transparent, it can be more tamper-proof and secure, and it can be more operationally efficient for the product provider. But really, it is largely a back-end
Infrastructure,
back
back-end,
office infrastructure
yeah.
thing. So, really, what matters as an investor or as a consumer is what your legal ownership rights of the gold are, right? So, that's got nothing to do with blockchain. It's whether or not it's allocated gold holdings or whether it's an unallocated
yeah.
product, right? And so, I would say the most important considerations for investors buying gold are the same today and in these new products as they have always been. Is it a trusted financial product provider? Is the product provider well capitalized? Does it have a history? Is there transparency around how the prices are generated? Where is the gold vaulted? Can I go and see
Location.
and touch the gold? Is it a reputable custodian? What are the fees like? Can I have the gold physically delivered, right? People should be asking those same questions whether they invest in gold through a bank, through
Or-
the stock exchange and
Yeah.
an ETF, through
Or
a vaulted
through
gold provider, or something that has blockchain in the mix.
So basically, what I am feeling that this is a new. It's a kind of a paradigm shift that we can expect when this technology is, if this technology becomes successful, because
Yeah, this is why at the beginning I said separate hype from reality.
yeah,
My personal view is that with individual product providers, blockchain is a nice to have, but it's not going to transform the market. As I said, transparency, security, operational efficiency, it can help with those things. It can arguably help in facilitating gold-based payments, enabling things like card payments that are linked to gold.
gold, yeah,
So it creates but it has the potential of creating a more extensible back-end infrastructure for gold. But really, at the end of the day, that matters. What matters to an investor is safe and secure ownership. Where blockchain has a more transformational potential in the gold market is somewhere very different, right? That's looking at the wholesale market where you have exchanges, for example, and looking at how they settle gold, right? There is the potential for facilitating a more efficient settlement process that cuts out settlement risk. Other applications of blockchain, for example, include tracking the provenance of gold, right? So the idea that you get the entire industry, producers, refiners, banks, and other market participants onto a private blockchain, and you can basically use that ledger to track gold from mine to refinery and ultimately to customer vault.
So my last question, Mr. Martin, you are going to launch some product with the London Metal Exchange. It's I think gold spot contract. It is called what, gold spot contract?
No, it's more than that. So the product suite is known as LME Precious.
LME Precious. Yeah.
And it's gold and silver contracts, a spot all the way out to 5 years, right? So we have futures contracts that go all the way out to the curve. And, the genesis of this product offering is more than 3 years ago, actually, when the World Gold Council engaged with the market to understand what the appetite is for modernizing the London market, right? The market in the OTC market in London is increasingly fragmented, and there are lots of regulatory pressures that make the OTC market structure increasingly expensive, at least for certain types of major market participants like banks. And so we worked with a set of banks to develop a product offering, using a clean sheet of paper and saying, if we built a product model from scratch, what would it look like? And so working together with the banks, we developed the product model and then talked to all the various exchanges, ultimately selected the London Metal Exchange as our preferred implementation partner. And it's been a very successful partnership to date. And these products go live on the 10th of July, so not long to go. And the banks that are supporting this venture, they have a commercial interest in the venture. Banks like Goldman Sachs, Morgan Stanley, ICBC Standard, Societe Generale are going to be very actively supporting liquidity provision through their own trading activity, but also bringing their clients onto this platform.
So how this region can utilize that platform? Very simple.
This region here?
This region, including India, China.
Right.
Hong Kong.
Yeah, so as you know, gold markets, market participants all around the world are very active participants in the London OTC market, right? So a lot of their positions ultimately settle into unallocated local London positions with the 5 commercial banks that provide vaults in the London custody arrangement. And what these contracts will do, they will physically deliver. They're not cash settled contracts. They will deliver local London unallocated ounces into market participants into those same structures, right? So if you are a Thai bullion broker or a bank in Malaysia, chances are you're already accessing the OTC market and you have an unallocated account with one of the clearing banks. Well, if you are a member of the exchange or a client accessing the exchange, then you can very easily trade these contracts and they will settle into local London. And the benefit is, of course, you'll see very aggressive prices in some pretty substantial size trading on the screen, so you can just click to trade. You can continue to bilaterally negotiate trades with counterparties and then register them on the exchange. But we certainly feel this is going to be a more capital and operationally efficient and frankly cheaper way for many market participants to access the London market.
And anyway, my last question in the same line. So if I can remember, last year I was speaking with LME. So I asked the same question to him that now that it is deliverable local London. So will it be deliverable in other locations? So if I can remember correctly, he said as of now it is London, but maybe it could be delivered in other locations. So what is your plan?
Well, I think the same still holds true, right? I can't go into all the future development plans. What's been publicly announced is that we'll be complementing the initial product set with options contracts, so the ability to do options trading. We're absolutely going to look at the PGMs, platinum and palladium. But then, everything around this solution is going to be led by market demand, right? This has kind of been developed in consultation with the market, and we'll see what the market appetite is like in the coming months and years.
It's my privilege that you are here today and I'm talking with you. Thank you very much for the rest of the conference, and just a few words about SBMA. How is the relationship going on and how are you enjoying this conference?
No, it's fantastic.
Purely as a participant's point of view. And
yeah, I'm slightly conflicted because I sit on the SBMA management committee. But that aside, I think it's a fantastic conference in terms of not just the numbers of participants, but the breadth of participants, right? All facets of the value chain, be it banks, brokers, jewelers, people on the supply side. So I think the SPMA has done a fantastic job to attract people from the entire region. And there hasn't been an event like this here before. So I think so far it's been really successful. But I'll let you be the judge as to how well the panel discussions and the presentations have gone. But certainly I've very much enjoyed it so far.
Thank you, sir.